A very warm welcome, everyone. My name is Nicholas Tan from Kenanga Futures Sdn Bhd. Thank you for spending your precious time to join our webinar today. Please take note that futures and options trading involves substantial risk due to leverage factor and may not be suitable for all investors. This webinar is purely for educational purposes. Kenanga Futures Sdn Bhd accepts no liability whatsoever for any direct or consequential loss arising from any use of the content of this webinar. So before we start, we would like to take this opportunity to invite you to the Kenanga Futures next webinar, which is on 13 August. 13 August is about market psychology, winner and losers. So an invitation email will be sent to you shortly, and don't miss out. Please remember to register once you receive the email. Next, if you have any questions for our speaker today, please feel free to post your questions through the Q&A box on the right side or bottom of your screen, and he will attend to your questions after the presentation. So we will have 15 minutes of Q&A session later on. So today we have Mr. Chong here, and he's going to share with us the strategies of trading in FCPO, the crude palm oil futures. So without further delay, I would like to kickstart our webinar today by welcoming our speaker, Mr. Chong. Chong, over to you.
Okay, thank you, Nicholas. Can you hear me?
Yeah, I can hear you.
Okay. Welcome everyone. Good evening. Welcome to another round of this Kenanga Futures webinar. Today we are going to cover the topic of FCPO. Okay. Disclaimer on the confidentiality of the contents. Okay. Then today's agenda, first we are going to cover the remaining of this year. What will be the potential fundamental impact that could take place that having an impact on CPO prices? And then next we are going to do some technical analysis on the CPO trend. Where are we currently at this moment? We have already dropped more than 200 points since Friday, and then last 30 minutes we have a recovery. Then next we will be covering some basic of CPO spread trading, an interesting topic that a lot of clients are asking. I hope that I can share some information with you on spread trading CPO. Then lastly, we'll be on a Q&A session. Okay, so first thing will be on the fundamentals, on one of the main reason why price is driving up since the beginning of last year. End of last year, we have a price skyrocket to 3,000, and then after that coming down. One of the main reason is because of this biodiesel utilizations plans implemented by both Malaysia and also Indonesia government to reduce the consumption on petroleum-based diesel, because we have a lot of crude palm oil, and this also will help the demand on crude palm oil consumption. Okay, I have to do some side detour here on some introduction on biodiesel. So basically, biodiesel is actually burning fuel, flammable fuel that is produced by using animal fat or plant-based oil, and then with this substance, they will mix it with actually methylene. Basically, is alcohol. Then after that, there we have the biodiesel, and then we will mix this biodiesel into the diesel. Then we will have either the B10, B20, B30, and so forth. So basically the B10 is representing 10% of biodiesel in the diesel. B20 is representing 20% of biodiesel consists in the diesel. Okay, normally under B10 to B20, you can use it under normal diesel engine without any modification required on the diesel engine. But on the B100 pure biodiesel, there are some minor modification required to do on the diesel engine in order to run on 100% B100 biodiesel. Next, we are going to cover the advantage benefits of using biodiesel. First thing, as you can see in the picture here, on the right hand side will be conventional fossil diesel, and the left hand picture will be like burning using biodiesel. As you can see that there are less, it is more cleaner, much more cleaner, and it will have less environmental impact, which is actually good for climate change. And also we will reduce the country rely on fossil fuel. This also help to provide positive impact to the country economy as well. Okay, next. Okay, currently what will be the utilization? Basically, Malaysia, we are on partial B20 implementation in the transportation sector in West Malaysia only for now. And we are targeted to have a full implementation of B20 by mid of June next year. And then currently for Indonesia, they are actually running on B30. They are planning to increase it to B50 in the future. This is some news on biodiesel.
So, Chong,
Hello.
sorry.
Yes.
Hello.
Yeah.
Chong, some of the participants, I think they only see the red screen freeze and the video. Maybe can you try to stop, share the slide and then reshare again?
No problem. Hold on. So.
And then try to reshare the slide again.
Okay.
Okay. So
how is it now?
Those who see red screen only just now, is it okay now? Can you see the slides? Oh, they say still same. All right. Okay, you guys can try to log out and then try to join again. We'll stop for a minute for you to rejoin.
Let me try this stop.
For those that have red screen that freeze over there, please rejoin the webinar. We will pause for a minute and wait for you to come back.
Okay, sure.
Okay, I know that some of the participants here is fine. Look at the screen; they are working good. But I know that some of them are only they only can see the red screen, right? Those who only see the red screen, please try to rejoin. You can just close the webinar and then click the join button again in your email. You can try to join using your mobile if the issue still persists. All right. I see some of you still see the red screen. Chong, I will try to take over the webinar, and then I will switch it back to you. Okay.
Okay.
All right. Let me try a few ways. I will try to play the video.
You can try to share the slide from your side.
Okay, Chong, I have made you the presenter now. Can you try to share the slide again? And see anyone still have the issue?
Okay, I show my screen.
All right, is anyone still have this red screen freeze issue? Okay. All right, so far I see all the participants here is okay, it's fine now. Chong, you may continue.
Okay, let's continue with the. Okay, let me just rewind backwards a bit. So Malaysia currently we are in B20 implementation in the transportation sector in West Malaysia Peninsula. Okay, we are expected to have a full implementation by mid of June next year. This is from the latest news that we able to obtain from the internet. Then currently for Indonesia, they are on B30 implementation, and they are planning to have a B50 implementation coming in the coming future. And next, this will be some news related to biodiesel usage. Okay, as you can see here, this is as of earlier of the month. European biodiesel usage from palm oil hits new record. Basically, this is actually some evidence that there is benefit in implementing biodiesel to ease up the carbon that we produce globally, and thus also we hopefully this will also partially reduce global warming. And this will be some news on less on the palm oil import into UK and EU. But in terms of biodiesel utilization, they are actually increasing the usage. It's just that they're importing less due to some trade policy that they're implemented. And this will be the data that I managed to obtain from Bloomberg Terminal. I'm not sure how reliable basically this is. This is by FO Lish, which is basically a subsidiary of IHS Market company, which IHS Market is basically the data provider for all the news agency, financial institution. So this is the data they have so far. This is the Malaysia biodiesel domestic consumption. As you can see, ever since 2011, we are in a very uptrend. Then this will be on our Malaysia productions, okay, which is also in an uptrend, and we're producing more and more biodiesel as the year approach. This will be Malaysia export according to MPOP. As you can see, lately there has been some sign of decreasing. This is mainly due to the ongoing pandemic. And then this is the Indonesia production, which is also in an export, which is also in an uptrend generally. Okay, and this is another major achievement where Indonesia a corporation in Indonesia called Pertamina, which is state-owned, they managed to produce a very B100 biodiesel, and they will be. I mean, their facility has been in place, and everything is ready, and they actually are ready to produce biodiesel in a big capacity. So this is also a latest news on June 29 this year. As you can see that, so this basically tells us that the demand, if this is to take place and the production is going to increase, the demand for crude palm oil will basically continue to increase and accelerate. Okay, and then so for summary for biodiesel is for the remaining of this year is very much depends on how quick all the especially Malaysia and Indonesia, how quick they can increase increase their implementation on the biodiesel to a higher grade of biodiesel blend. The faster they can implement this into a nationwide scale, the higher the chances that the demand will improve for CPO prices, and also this will also means that it will drive CPO price up higher. Okay, next, we will have another impact which is ongoing. As you are aware, this you are quite familiar with this. Just want to highlight this because this is one thing that is happening and is a fact. So you have no choice. And you can see that this is the number of cases, about 11.6 million, which is on the beginning of the month where I capture where preparing this slide presentation. And the next slide is the latest as of yesterday. As you can see, the increase is basically quite scary with the second wave of the pandemic. As you can see that it is more about 50% increase in within just less than a month. So this is very alarming, and this will actually drag down the CPO consumption indirectly. Okay. So what's happening now is that we have a second wave across the globe for COVID-19, and Europe situation is basically stabilizing. And in terms of the top 6 countries, there are actually 5 top 6 countries that is reported and increasing in cases, is still within an uptrend, not yet stabilized, except Russia. The top 6. The top one will be, of course, China and then followed by the top one will be US, then followed by India, of course. And then some major city in the world are actually re-implementing some sort of restriction movement, so that it will ensure that the virus will not spread on a very large scale. And so far, unfortunately, despite some encouraging news that we see on CNBC, that there are some vaccines is already on trial, and there has been some positive impact on the trial, where all those who participate in the trial are having an increase in antibody. But officially, WHO have not certified any vaccine that is able to cure the COVID-19 so far officially. So this is and it is targeted the earliest, which is the earliest targeted available of vaccine is basically about the last quarter, and that is actually an optimistic expectation, to be honest. And conservatively, according to some of the research or pharmaceutical company, they will be available somewhere next year. Okay. And so this is some development on the COVID-19 that is delaying the implementation of biodiesel, as you can see. Okay, new date. Okay, back home, Malaysia, we are also experiencing some delay in implementation on Sabah and Sarawak. Okay, and the next factors that is going to impact the CPO prices for the remaining of the year. First thing will be the levies, which is actually taxes. Okay, and currently the India is one of our top buyer of crude palm oil from Malaysia, especially, and currently India is implementing 44% levy on palm oil import from Malaysia. One of the main reasons this is at a high is because of our political relationship between Malaysia and India itself, and hopefully that the relationship will improve, and those India will started to loosening the levies on palm oil buying from Malaysia. And next will be Indonesia. Currently, the export levy is basically for every ton export, they impose a $55 per ton levies on the export. And for Malaysia, the second biggest palm oil exporter, we currently have zero tax. Okay, next we need to basically looking forward to see the changes in relationship with India, of course, and then also hopefully that the EU will start to loosening their stance on the policy to ban palm oil from importing to EU for biodiesel. They have basically a mandate to implement that, but there is delay. But hopefully that their stance will also change after some there are ongoing negotiation between Malaysia, Indonesia, and the EU, and hopefully there are some fruitful discussions that is going to be good for palm oil exporting to EU. Okay, another factor is of course indirectly have an impact on CPO prices will be the crude oil prices. One of the reasons why crude oil prices is related is because of the biodiesel just now, as a higher crude oil prices will basically encourage more biodiesel implementations. Okay, so because of the economic factors. Okay, year to date for crude oil, we are still crude oil is still recording negative price movement year to date. For end of last year, crude oil actually settled at somewhere near 61 barrel per dollar, but currently we are basically in the 40 plus or minus level for crude oil. Okay, in terms of the price recovery, ever since crude oil go negative, it is mainly driven by the output cut, which is determined by the OPEC crude oil producer country plus Russia mainly. They have come into agreement to reduce the output to drive crude oil prices up. In terms of demand wise, yes, it has there is some increase in demand, but the space is rather slow due to the ongoing pandemic that we are facing. In terms of technical trend, okay, we are basically currently overall crude oil prices has been coming to negative and then on a recovery path now, but as of the near term, we are basically in the consolidation mode between plus and minus 40. This basically has been lasted for like about nearly 2 months already, in between fluctuate between $40 per barrel. Okay. Next will be the trade war, of course. As ever since the trade war took place on 2018 between US and China, their CPO prices are heading southbound, basically recording lower low ever since that, and it is only recover after some kind of agreement was reached. Okay, so these the conflict between these two economic giants will spark another round of trade war, which is having a negative impact on news. As you can see lately, the news is that US has ordered the closure of this China consulate in Houston, and China retaliate back with order the closure of US consulate in Chengdu. So as you can see that the relationship is getting escalated in terms of tension. So will this spark another round of the trade war, or will both parties cancel the phase one agreement that has previously signed? That is an unknown factor. So if this is to happen, it will have a negative impact on CPO prices. So please be aware of this and take note. And this is the chart that I show you. Ever since that the 2018, when of course the trade war, the conflict started somewhere near January 2018, but price started to come down when China and imposed some levy on the soybean oil import. So that is where you see, and that the market has been gradually sliding lower and lower, recorded lower low, and then it is when towards the end, near the end of the trade war, when they have started to loosen up their tax levy, and especially when China committed to purchase soybean from the US, then we see some recovery in CPO prices. Of course, this is not directly related, of course, but generally a trade war is actually having a negative impact on CPO prices. Okay, of course, the next one will be our Malaysia foreign exchange rate. Okay, so far the ringgit has been recovering. Okay, as you can see that it has this is the chart since the early of the year. Ringgit has been weakening against the US dollar to the lowest of 4.46 somewhere in mid-March, and that's ever since that when the Federal Reserve started the stimulus on monetary policy easing, you can, and lower interest rate, that resulted a weaker US dollar, and as you can see that ringgit recover from there to the current 4.25. This is as of yesterday. Okay, next. Okay, of course, this is natural disaster. Okay, from the Malaysia meteorological reading, we are currently having a 60% probability of having an basically it's not El Nino, it's actually La Nina now, basically, and this will be expected, this probability to sustain until August, until further review. As of the Southeast Asia region, they have a meteorological center also. They actually upgraded the La Nina the possibility of La Nina to La Nina watch from neutral. This is actually on mid-July, so we are basically here in semi-possibility, nearer to a possibility of a La Nina, which is a wetter weather situation. And also other factor to watch will be natural disaster in edible oil related plantation region. This is especially soybean plantation area in the green plains in US and also Brazil and Argentina. You have to take note if there are any natural disaster or any typhoon or flood. This is the news that I plucked from the Asian Meteorological website, where they have upgraded to watch for the La Nina possibility of happening. Okay, this is the next one. This will be the map that I snapped out from Bloomberg Terminal, where you can see that we are currently experiencing weather. As you can see, probability of rainfall is still high. This is as of yesterday, and only a small part of this map are having a hotter weather. So basically, generally, we are in a weather conditions. So this also will result in a weaker production of crude palm oil overall, because especially in Indonesia, where the logistics involving transporting the fresh fruit punch from the estate to the palm oil mill is rather poor, the condition in terms of logistics, where they don't have a very well established infrastructure in terms of logistics. So that itself, if there is flooding, then basically it will actually slow the transportation of fresh fruit punch to the palm oil mill to process to become crude palm oil. Okay, other factors to be watched for the remaining of the year. As you can see that China having a deteriorating relationship with Canada. Canada is basically pro-US, so the deteriorating relationship resulted China stopped buying Canada-produced rapeseed oil. So, and then other factor will be what will be the performance of rival edible oils, and also their fundamental development in terms of supply and demand that is going to impact on their other rival edible oil prices. This is the China Zhengzhou Exchange rapeseed oil prices. As you can see, ever since China announced that they were not buying rapeseed oil from Canada, the price has been escalated quite high, and only recently we have a correction. So this actually indirectly have some positive impact on crude palm oil prices as well. Okay, this is some data on rapeseed oil. As you can see, the largest producer country is Canada, followed by EU, China, India, and others country. Okay, this will be the second section of our webinar today, which is for trend analysis. We started with the daily chart. Okay, this is as of today. As you can see that generally we are in an uptrend market. Price has been recorded higher high and higher low. Yeah, we have a near more than 200 point correction since ever since the high of Friday. Monday, Tuesday alone is already 200 point retracement correction. So, but generally, in spite of that, we are still on an uptrend if you connect the line between the low and the higher low and the higher high. So generally, we are still within an uptrend for the near-term daily chart. Okay, MACD is still positive. So basically, generally, we are in an uptrend for the near-term daily chart. As of the weekly chart, which is on a medium-term time frame, we are actually, ever since the market reached above 3,000 and corrected below 2,000, near 2,000, we are actually in a retracement, and since last Friday, the retracement has reached more than 61.8% Fibonacci retracement level. So will this be Another round of downward movement or movement is yet to be seen as of now. Basically, for the near term, is still up, but it's within the previous big down movement. So overall, that is the current state. MACD is still on positive zone, whereas the RSI is still above 50. So basically, this still shows that the uptrend momentum is still persisted with some minor correction currently. In terms of point and figure chart, currently we are in a correction, and the correction has, in terms of point and figure chart, have not stopped yet because we didn't see any yellow dots appearing. We didn't see any yellow dots here. So if there is a yellow, green dots, sorry. So if there is some green dots here, meaning to say the retracement has ended. So this will be another phase of the market to determine the next direction. It can be consolidation here, then it's either going up or down from here onwards. Okay. Okay, that's for trend analysis. Okay, now there will be the last session, second last session, where we are covering the topic of CPO spread trading. Okay, let's go back to the basic first. Okay, what actually is spread trading? Okay, essentially, spread trading involving taking opposite position of the same or related product. Okay, meaning to say you will establish one long and one short position simultaneously in order to activate this spread trading. Okay, so the primary focus, what we would like to see here is the relationship in terms of prices between the involved product that we establish the trade, the spread trade. Okay, so and then how do we profit from it is if let's say assuming we do a bull spread or a bear spread, it will be the different in terms of pace movement of prices between the involved product, meaning to say one leg of the spread is moving higher faster than the other leg that is short. So the price difference will increase, thus you can profit from that if you do a bull spread. Whereas if you do a bear spread, basically the pace of the one of the leg of prices going down faster than the other, that is on the opposite long direction, so you can profit from there as well. Okay, or when the mispricing normalize, what does this mean? Basically is that where if you see that generally if a pair of spread are generally trading between, let's say for CBO, let's say for example, just illustration, let's say it is ranging between 20 point negative mostly, and one fine day you see that the spread actually widened to negative, say 50. So basically, we can actually identify it as a mispricing, but of course, you have to really cross-check this with the underlying fundamental development as well. There is a reason for why sometimes price go beyond the norm of the range. So if it is purely on mispricing, basically you can take advantage of it by initiating a bull spread to buy at negative 50, and when the price normalize back to negative 20, basically you earn 30 point profit from there. Okay, so basically in terms of the spread trading, there are the forward curve. You have to take note of the forward curve. What is actually forward curve? forward curve. Okay, before I come to this is because today we are covering the CPO spread trading. So basically, when we trade CPO spread, we are actually in the category spread. Before that, spread trading, there is a lot of category. Okay, one of the category is intra spread, inter spread, and then cross market spread. So the main category is intra spread and inter spread. So intra spread is basically we call it calendar spread, meaning to say we buy and sell the same product but different expiry month contract. Whereas inter spread is actually inter commodity. Basically, it's like example, you buy CPO and then you short soybean oil or another example will be like the crush spread where you buy soybean, then you sell the soy meal and soybean oil. That is actually in the spread. So currently today we are purely focusing on intra spread, which is the calendar spread. Okay, so calendar spread, when you trade, you have to be aware of the forward curve, which is fundamentally a relationship between of the relationship of prices between different expiry month. Okay, so there is two category of forward curve. First thing is the normal contango forward curve. In the contango forward curve, basically you have the near month contract prices trading lower than the far month. So this is considered a normal curve, a normal situation where everything is intact. There's no disruption in supply and demand. Okay, why? Because due to the cost of carry by nature, the farther expiry month should be priced much higher than the near month expiry. So that is why they call it a normal contango curve. Okay, and in terms of the abnormal forward curve will be, we call it the backwardation curve. So backwardation, where we can see that is actually the near month price is actually higher than the farther month expiry contract. Why is this happening? Is because normally it's due to disruption in terms of supply and demand. That is the main reason for the backwardation curve to appear. Okay, so under the contango month, there's no supply and demand disruption. Everything remains intact, so everything is as per normal. There's no slight drastic decrease in production or inventory, or even on demand side. Okay, so in this situation on contango, you will see price spread are normally trading at negative. Okay, so in a backwardation situation, you will have the spread trading at positive, which is what we are currently experiencing. Okay. Okay. Next, this will be the forward curve. As you can see, this is a normal contango curve. Okay, this is the expiry contract. We have nearer month to farther month. Okay, nearer contango. Sorry, why is this forward pricing? Wait. So this is not. Okay, this should be a contango curve. And this should be a backwardation curve. Okay, correction on this, sorry. because in a backwardation, near month price is much more higher than far month, and in a contango, near month price is normally lower than far month due to cost of carry. Cost of carry basically is actually like interest, storage cost, tank rental cost, everything. So it meaning to say it costs you more to carry the physical stock far into the future. Okay, so let's assess some pros and cons of doing this CPO calendar spread trading. First things, of course, let's assess the pros, the benefit. Okay, reduce risk to some extent, yes. And then, okay, another advantage is basically lower margin. Okay, this is actually not by us, is basically implemented by the exchange, meaning to say that the exchange actually acknowledge that by doing spread trading, it is actually lower risk because the exchange, the clearinghouse willing to accept a lower required margin when client initiate a spread position. So generally, it is lower risk only because of you have one long and short, and each of these prices method tends to cushion or contra of each another. So that is resulted a lower risk. And I have to have a disclaimer here is that if let's say if you have this thinking and you go and do the spread in and multiply into few couple of contracts, then basically the exposure is pretty much similar to an outright movement already. So this is where you need to really do your homework on money management, on how much exposure you needed as per what as according to what your capital are having in your trading account. So please don't misunderstand that when you have lower risk, lower margin, you can do multiple lots to increase the chances of profit. By doing that, you basically increase the risk and also increase the volatility. Okay, so it could be an advantage if you are a slow-paced person, because generally most cases, CPO spread price tends to move in slower pace as compared to outright prices. Okay. So of course, lower volatility most of the time. And generally, because the movement is lower, this I have to put disclaimer in. Generally, lower slippage is normally applies to those active month-related spread. So if you are trading some odd month spread which is far away or near spot month spread, basically there is still potential of slippage, but generally comparatively to outright price movement, which is much more quicker, you might have a much more uncontrollable slippage. Slippage meaning to say that the price difference as compared to the entry price you intended to go in. Let's say assuming you have a short signal today, you're trying to short it at 2650, but by the time you see the signal you want to get in, the market is already at 2640, so you have a slippage of 10 points there. So that is generally what is meant by slippage. Okay, so in terms of direction, it is less direct price movement exposure to the direction of the price movement. Of course, because of spread, you are doing one buy, one sell, or one long, one short. So basically, your exposure to a price movement is comparatively less compared to outright. Okay, the pros and cons here is purely compared to the outright. Okay, and of course, you will have less surprise and And some trader they don't like surprise, and when if there is surprise, they don't know how to react sometimes. Okay, because these surprise normally are related to emotions. Okay, and of course, when you long and short different calendar month, so you are actually not exposed to the gap out and gap down as compared to the outright trading, where you have a lot of gap down. This is mainly due to overnight movement of rival edible oil, especially soybean prices, and also the foreign currency exchange rate big difference. And then, okay, in terms of the cons, the disadvantage for trading spread, of course, you have smaller profit generally, but overall, these smaller profits is because you have a reduced rate, then you take a smaller profit, which is actually quite balanced in that sense. You have, if you are a fast person, then it is not really it might not be suitable for you, because you might get bored, or you might get annoyed by the slow movement of price sometimes. Okay, of course, when you trade spread, you involve higher brokerage fee, because you're doing comparatively to outright, you're just doing one contract, but now you're actually doing 4 contracts. Sorry, you're doing 2 contracts. If your round turn is 4 contracts already, so basically higher brokerage is required for doing spread, and then of course it's require patience. And last but not least, because of the slower movement, you will see less intraday trading opportunity as compared to outright. When in outright situation, if you use a 5-minute chart, basically you might have like 5 to 10 trading signal each day, but whereas in spread it is relatively lower in terms of trading signal appearing because of the slower movement. Okay, now this is the why is it lower risk. This is actually the range. Okay, so this is the range of the day ever since 2018. As you can see that the range is pretty much okay, containable. Sorry, this is actually C3. C3 is actually the outright range. Outright range, as you can see, the movement is really mild, really wild. Sometimes it can go up to above 100. Lately, as you can see, there's very volatile here. You can see market can go up to as much as 100 or over 100 or even above 200 points for the range. And the purple line is basically the average true range of 14 days. Okay, next will be the spread range of the active month contract, which is the 3rd month and 4th month. And the red line will be the average true range. As you can see that on average, it will be ranged between 20, and it's a very rare occasion that spread price movement will range above 20 points, which is very rare. As you can see, generally is between, most of the time is between, you see, 5 to 15, maybe the most overall, as compared to the outright movement, which is pretty much wild. So if you are a patient person, you slow and steady person, and you don't like fast-paced environment, rigid, high reflex trading kind of environment, basically spread is very suitable for you. But if you happens to be the opposite, then basically I would say maybe an outright trading will be more suiting your personality. Okay, type of spread, bull spread and bear spread, as I say. When normally when we say bull spread or bear spread, we always use the near month as the referring referring month. Okay, when you say bull spread, let's say I do a bull spread for September, October month. So basically, it's always bull spread October, September, October. So meaning to say I buy September, I sell October. Okay. Inversely, if let's say I do a bear spread on September, October, basically you are actually selling September and then buy October at the same time. Okay, so always refer to the near month as the referral. Okay, let's say I buy, example, I buy September October spread, meaning to say you are buying September, selling October. If you are selling September, October spread, basically you are selling September, buying October. Okay. So if you do a bull spread, you anticipate price to recover actually. So it's either the spread going from 0 to positive, or from a very low negative recover to a higher negative value. Okay, where in bear spread you are anticipating the price to narrow or go down or shrink in terms of the relationship. You anticipate the price to go negative, meaning to say this also meaning to say that in here you anticipate the long leg to go much more faster than the short leg. On the opposite, you are anticipating the short leg, meaning price go down much faster than the long leg. Okay. So generally, when bull spread, meaning to say this will be normally in a backwardation or over contango situation. So you will tend to want to initiate a bull spread. But what on the opposite, you want to do a bear spread when the backwardation is really overpriced, and then it will come back to normalize to a much more lower spread pricing. Okay, so in terms of supply and demand, you have to really be aware of what is the norm and what is the out of norm. Okay, basically this is about 7 years data of MPOP. As you can see that so you have to do a study on the export, stock and production. Okay, generally the more fluctuation will be on the inventory level. So as you can see, inventory movement tends to have inverse relationship with the CPO underlying prices. So you have to take note of this. So this out of norm places is where normally there is opportunity in spread normally. Okay, and this will be the price code screen for CPO spread. As you can see today, the price movement is rather wild for the inter 1 month, meaning to say 1 month different. This is the 2 month different, meaning Sep November. This is Sep October different. So today is considered quite a wild movement. You can see 38% movement. This is really a wild movement day for today, and someday price can be really wild, and it is where when you need to do your rigid risk management to contain, to avoid from getting out of hand when you do spread. So okay, in terms of trading volume, as you can see, second month, third month, second month, fourth month. So meaning for here basically is actually this is September. For now is September, October, September, November. This is October, November, October, December for now. Okay. For now only maybe applies to here. Okay. January meaning to say the second month, the third month, or second month, the fourth month, and etc. So generally, as you can see that trading volume is much more active in the active month and the fourth month, which is C3, C4. So this also means that by trading C3 and C4, you will experience less slippage generally. Okay. And this is the spread analysis chart for C2 and C3. As you can see, here is where you have the contango, and we are currently on backwardation. So in terms of as of now, of course, if you compare to this is as of yesterday, and the code screen is as of today. As you can see, currently we are basically somewhere near here for C2, C3. Let me check. So C2 is 47. Okay, so we are somewhere near here. So as you can see, for spread trading, there are opportunity when there is backwardation curve, but in a very extreme level, which is basically normally above the 50 level. So this is where you can try to do a bear spread opportunity. But having said that, if you do this, you cannot do a big volume pair spread, because of generally, if it go backwardation, it can go wild sometimes. So this is where you tend to do it, to test it with one pair or two pair, and then if there's follow through and come back to 50, then you take profit. So generally this, and in the event previously there is a contango, you can see that generally price is trading above negative, maybe 50, I would say also. So anything below negative 50 is considered out of norm. So this is where there is trading opportunity as well. Okay. Okay, I'm running ahead, running out of time actually. Same to C3, C4. Generally, you see, because of this is the active month contract, so generally the spread will be much more lesser because of it is quite liquid and active. Whereas for else the C2, C3 trading participant, is the price spread, it will be wider, because C2, meaning the second month, will be price spread is a bit different. That's why you see a bigger range here. Okay, same trading opportunity appear when price go over the norm. Okay, or if you are not the mean revision kind of trading, you don't like, you can basically trade using technical indicators. As you can see, this is quite relevant in the sense you see MACD cross up, you can see price tends to go up, and MACD cross down, you have price coming down, which is actually quite relevant. Even in a MA crossover, you can see that there is a follow through in terms of technical analysis if you trade spread. This is the continuous month for C3, C4. Also, technical is quite reflective. Okay, this is C3, C5. Also very reflective. Okay, so key takeaway will be CBO spread is generally less volatile and risky compared to outright position, but doesn't mean that you can press on full throttle and increase the number of loss, so that it is as what you expected in terms of profit. But at the same time, when you increase the number, you basically increase the risk and also volatility in terms of your equity, as when it's mark to market reflected in your equity. That is also very volatile in that sense. So it is not advisable to do that. But what I'm trying to say here is, don't don't have the wrong impression that it is less risky and less volatile, you can do more lots. That is not always the case, okay? Okay, in terms of the movement, yes, it is lower when it comes to calendar spread, but this is non-spot month related, of course, and I actually recommend you do anything that is related to active month, which is C3, and generally price is slower, and with this lower pace of price movement, it allows you to make a decision. It allows you to take more time to make a decision, but of course, then again, every trading decision should be in place before you initiate that trade. Okay, so this maybe could be due to if things get out of hand, or some spot price spike, and it is much more slower as compared to outright. You allow more time for you to make a decision to either cut the position or reduce exposure or initiate position, etc. Okay. So and last word is calendar spread might not be suitable for you, especially if you like fast-paced environment. So you might get annoyed by the slower movement, and from there you get impatient, and thus it will lead you to make trading mistake. So that is what I'm trying to use. There is pros and cons on doing this, of course. So you have to be really assessed in terms of whether your personality suits to trade calendar spread or not ultimately, and at the same time accept the disadvantage of trading spread, of course. Okay.
Chong, is there anything you would like to add on before we end the session?
Stay safe. We are experiencing increase in cases.
Yeah.
Always practice personal hygiene, social distancing, and wear a mask. Okay, and I would say always take care of the risk, even if it's in spread trading. As you can see this. This is considered very big movement in spread. So yeah, I know that outside that there are a lot of people promoting spread trading. This is easier, or this is less risky, less volatile, but in some cases it will still be full of surprise. So always implement strict risk management in accordance to your capital, not the price movement. Especially you are new, unless you have trading this for like a couple of years, you know pretty much how this animal behave, then yes, maybe you can do an assessment on the spot on what is going on and how you can handle the issue. But if let's say you are still new and want to try this out, always implement rigid risk management. Happy trading, and that's all for me.
Okay, great, and thank you everyone. Should you have further queries, please feel free to drop us an email at bcrm@kenanga.com.my, or you can reach out to CHONG directly. And we appreciate you being here and hope that you enjoyed the webinar today. Please take a minute to rate our webinar, and your feedback is highly appreciated. Again, don't forget to register for our next event. Thanks again for joining us, and hope to see you again. Stay safe, everyone, and good night.
What are you clicking?
Click KenangaFutures.com.my, Malaysia's leading derivatives broker.